I'm sorry, girls. Sorry for the unmentioned disconnectivity. My hand went on the wrong place actually. Instead of pause button, I happened to touch the switch off button. Anyway, I'll continue. That was a very short video. I'll continue now with the diminishing balance method. This is diminishing balance method. Though that was just a flip back, just a revision of what we did in the previous class. Now we proceed, children, with diminishing balance method today, the reducing balance method. This is illustration 14 of your textbook. A company had bought a machinery. This is from your textbook. No need to open the textbook now. Just keep following the video here. I have written the details of the question here, the information of the question, vital information of the question here. The book value of the machinery is rupees 1 lakh. The question says a company had bought machinery of rupees 1 lakh, including a boiler. I'll show you the question here. This is the question. Including therein a boiler worth rupees 10,000. So 1 lakh is the book value of the machine, which includes a boiler of rupees 10,000. Depreciation was charged on reducing balance method. This is, they tell us which balance method, which method do we have to use. So this question will be done. We will charge depreciation, but according to the reducing balance method or the diminishing balance method. And the rate of depreciation is 10% per annum for the first 5 years, and the machinery account was created accordingly. During the 5th current year, the boiler became useless on account of damages to some of its vital part. The damaged boiler is sold for rupees 2,000. We are supposed to prepare the machinery account for 5 years. 5 years the asset is disposed of in the 5th year. And in the 5th year, the asset is disposed in the 5th year. So we are supposed to make the asset account for 5 years. Let us now proceed with the asset account. This is, I have written the information here. The book value of the machinery, rupees 1 lakh. I have broken it as somebody asked last in the previous session also, can we break the machinery that to be sold in 2 parts? This is the same example. We can proceed like this. So 1 lakh is divided in 2 parts, that is 90,000 and 10,000, because we are discarding of the machinery worth rupees 10,000. So from the first year only, let us assume that this is separate machine. Machine 1, machine 2. It will be easy for us to handle. But if, children, you are comfortable in handling the common machine, you can proceed with that. There is no harm in doing that. The answer by both the methods is common. Rate of depreciation according to the question is 10%. Duration for this depreciation and the asset is 5 years. The asset, that means, is sold in the 5th year, after 4 years. It is sold for the selling price is rupees 2,000. The asset worth 10,000 is being sold for rupees 2,000. So asset from this 1 lakh, the asset that was worth 10,000, this asset is being sold for 2,000 in the 5th year. Now let us proceed in making the asset account. See, the asset account is made like this. I've made the asset account here. The asset account you can see here, the debit side, the credit side. Asset account has a debit balance. Whatever increases the debit side is always taken, whatever increases the asset is taken on the debit side. So to bank, rupees 90,000 and 10,000. We proceed with 90,000 and 10,000. We have divided the asset in 2 parts, asset 1, asset 2. By depreciation on 90,000 at 10% will be 9,000. On 10,000, depreciation will be 1,000. Then you will find out the balance. I have not done it here because of lack of space, but you are supposed to write down the balance. Balance carried down. 90,000 minus 9,000 for the first asset, that is 81,000, and 10,000 minus 1,000, that is 9,000 for the second asset. You will write it here, balance carried down. And this balance carried down will be brought down here. Girls, it is imperative. Please do not miss it. I have missed it because so that I use less space while recording. So you are not supposed to miss it. You will lose marks if you miss that step. Because the step is revealing the answer here, I have just tried to club both the steps here, which you are not supposed to do in the question. 81,000, that is this 90 minus 9,000, 81,000. 10,000 minus 1,000, 9,000. At the rate of 10%, but 10% on this now. Now this year has gone. 10% on 81,000, that is 8,100. 10% on 9,000, that is rupees 900. Balance carried down, 81,000 minus 8,100, that is 72,000 you will write here. 9,000 minus 900, 8,100 you will write here. Balance carried down. This balance carried down will be brought down here. So 2 balance brought down. For us will be 2 balance brought down, 72,000, that is 81,000 minus 8,100. 72,900 it will come. And 8,100. Depreciation 10% on this and 10% on this. Here 10% on this and 10% on this. The depreciation you will bring it here, balance carried down. 72,900 minus 7290 is 6561. 8,100 minus 810 is this amount, 7,290. That is the amount. Now here the depreciation at 10% on this in the 4th year. 4th year also no transaction in the 4th year. We only charge depreciation. 10% of this is 651. 10% of this is 729. We charge depreciation. Then you find out balance carried down. That balance carried down will be brought down here. So this is the balance brought down. Asset 1, 59,049. Asset 2, 6561. This is the 5th year. This is the year of sale. In this year, the asset is sold. As soon as you are informed asset is sold, the first thing you write is buy bank rupees 2,000. Now this asset, second asset is being sold. Asset that costed rupees 10,000 in the beginning. This is asset number 2. For us, the value of this asset number 2 is 6561 now. See, this was asset was valuing 1,000 in the beginning. Then it came to 900. Then it came to then it came to 9,000. Then second it came to 8,100. Then it came to 7290, and then it came to 6561. So the value of this asset is 6561. Is being sold for 2,000. That means there is a loss. Asset that is 6,000, that is for rupees 6,561 is being sold only for 2,000. That means this minus this at a loss of rupees 4,561. This is the loss on sale which you will write here. Had there been a profit, suppose this was 20,000. This was asset worth 6,000 is sold for 20,000. Then it will be a profit which you will write here to profit and loss account, to loss on sale, or to profit and loss account 656, that amount. This 6561, 20,000 minus 6561 will come here. Profit will come here, loss will come this side. This asset is gone. Second asset is gone. But the first asset remains with us. The balance of the first asset, depreciation on this asset at 10%, balance of the first asset, balance brought down in the next year, in the 6th year. So this is the 6th year, balance brought down in the 6th year, and this is what has been asked. What is the balance of the asset left in the 6th year? And the loss on sale of asset that is getting sold. This is illustration number 14. So this is how the question proceeds for diminishing balance method. Then children, today we proceed with the methods of recording depreciation. Methods of recording depreciation. Children, there are 2 methods of recording depreciation. We record depreciation. The depreciation can be found out and recorded in these 2 methods. The first method is by charging it to the asset account, by charging it at to the asset account. We charge it to the asset account, and that you have done. What we have done is the same thing. We charge the depreciation in the asset account only. On the credit side, we write by depreciation. That is what is done. There is one more method to charge depreciation, that is by creating the POD account. POD account means provision for depreciation account. This, children, provision for depreciation we have done. That is why, this is the reason why I did the provisions and reserves with you before depreciation, so that you understand the meaning of provision. For charging depreciation every year for a number of years, for 5 years, 10 years, more than that, it is always safer and advisable for the business to create a provision for that. When a provision is created, then why not show it in the asset account? So we charge depreciation not every year in the asset account. It is, children, this is preferred more in the case where there are multiple assets in the business. The business does not proceed only with a single asset. So, and making asset account for every different asset is also impractical and waste of effort, waste of time. So what is advisable? We make one asset account but different provisions of depreciation account for each asset which depreciate at different rates. The building depreciates at different rate, machinery depreciates at a different rate, computer depreciates at a different rate. So there are different types of asset we depreciate at different rates. For that we prepare the POD account, the provision for depreciation account. So this is, children, this is an account. The provision for depreciation account is a liability account. This POD account, this is a liability account. Liability account in the sense that whatever increases the asset, whatever increases the account will come this side. And whatever decreases the account will come this side. So we write the first thing we write here by depreciation. That is the depreciation charged, like in the previous previous question, 1000 was the depreciation in the first year. So depreciation, and here we write the asset, this is taken to balance, carried down. There is no more depreciation. 1000, 1000, 1000 this year also, and this is closed. This is second in the, we come to the second year. In the second year, now how it is shown in the second, this was the first year. In the second year, how it will shown, that means this is the balance. What do we have in this account? This account will keep showing us how much depreciation has been collected in the depreciation account for this asset. We are accumulating depreciation. Every year we are saving depreciation for the replacement of the asset after some years. How much do we have in that account will be shown by this account, the POD account. So by now we have saved rupees 1000. This year also we will save rupees 1000. This is by balance. And by depreciation, this year's depreciation again will save rupees 1000. We save 1000 for every year. So that means we have 2 years. So here we will show, in this is for the first year, this is the second year. So we will show here 2 balance carried down. How much will carry down this year? Ab tak ho gaya 2000. We come to the third year. In the third year again we'll write, अब कितना हो गया अभी तक? By balance brought down is rupees 2000. 2000 इकट्ठा हो चुका है हमारा. We come to the third year. इस साल का again we'll charge by depreciation. इस साल का हो गया 1000. So third year तक हो गया हमारा 2 balance carried down rupees 2000 plus 1000, 3000 हो गया अभी तक. This year also close. We come to the fourth year. Like this, every year we find out how much balance has been collected in depreciation account, 3000. Suppose the asset is sold in this year. Now what do we do in this year? By balance this year, charge this year's depending upon on which date the asset is being sold. If the asset is being sold on the first date of the year, then this is the balance that will be shown in the asset account from here. This will be transferred. But suppose the asset is not sold on the first date of the year. Whenever then it is sold उतनी देर का डेप्रिसिएशन तो लगाओगे ना. सो सपोज इट इज़ देयर फॉर 3 months, तो इस साल 3 months का डेप्रिसिएशन लगा लो. सपोज इट इज़ देयर फॉर द होल ईयर, यू चार्ज दिस ईयर्स डेप्रिसिएशन. बाय डेप्रिसिएशन, दिस ईयर्स डेप्रिसिएशन on number of months it is there in existence in the business, it is there with you. By depreciation for that amount, rupees 1000. I am assuming, suppose the asset was there for the whole year. At the end of the year, we sell this asset. In the last year, we do not write here to balance carried down because we are not continuing with the asset account. We will transfer this to the plant account, the asset account, whatever account you make. To the asset account, you transfer this depreciation 4000. And this is the depreciation that will go to the asset account. Now suppose this is the asset account. This is the asset account. The asset account also, this is in the same way as we have made the debit and the credit. This is the debit and the credit of the asset. Asset is a debit balance, so increase in the asset this side and decrease in the asset this side. So we buy the asset, it will come this side, it will come on the debit side. We sell the asset, or whatever decreases the value of the asset. Asset is depreciated. Depreciation and the sale come on this side. So we write here, the first year is to bank. We buy the asset. To bank, rupees, whatever the amount, supposing rupees 10,000. We write to bank, and by balance carried down, rupees 10,000. The difference now in this method and the previous method that we did here, when the asset, when the depreciation is being, this was the previous method which we did. When the depreciation is charged to the asset account, we charge depreciation in the asset account only. This was the asset account. We buy the asset, we charge depreciation here. But in this method that we are learning, we do not charge depreciation in the asset account. The asset, the opening and the closing balance of asset is always the same. It does not vary. This is rupees 10,000 and 10,000 here. Second year again, this was the first year. This was the first year. Second year again, to balance brought down, rupees 10,000 again. By balance carried down, rupees 10,000. This will be same for the third year, same for the fourth year. We come to the fifth year, in the year of sale. Now in the year of sale, what will happen? The asset account, it is the same way as we mentioned the asset account in the previous method. In the with the previous question we mentioned there. So we write here, by bank. In the year of sale, on the date of sale, by bank, whatever the asset is sold for. Suppose it is sold for 2,000. The asset is getting sold for 2,000. We write by bank here. Now here, instead of by depreciation, we write by POD. Now this is the POD balance that we are transferring. Here in the POD account, we wrote to plant, rupees 4,000. This is coming here. This 4,000 is diagonally being posted here in this account, the last year of sale. POD rupees 4,000. So asset, the value of asset is 2,000 is sold for, supposing it is 10,000. The value of asset is 10,000. The POD is 4,000 by now. That means 10,000 की value है book value asset की. 10,000 every year. We are showing 10,000, 10,000, 10,000. The value of the asset does not change in this method. The value remains the same. क्यों? क्योंकि depreciation हमने सारा इकट्ठा दिखा दिया यहाँ पे. 10,000 का asset, 4,000 depreciation आ गया उस पे. That means 10,000 minus 4,000, the value becomes 6,000. The asset of 6,000 is being sold for 2,000 now. That means at a loss of rupees 4,000. That by loss on sale of asset, that will come here rupees 4,000. As the value of rupees 6,000 is being sold for 2,000, the value or the loss on sale of asset is rupees 4,000. This is the balancing figure. This will come here and this will go to this will be shown in the profit and loss account later. See the method, the difference of this method and the previous method, that remains the same. the value remains the same. The depreciation will be different, but then the method of charging depreciation is different. We do not make the depreciation account in that method, and we make the asset account and the depreciation. Two accounts we make. The POD account. The book has shown the POD to be made after the asset account, but I will always suggest to proceed in case the provision account has to be created. First create the provision account, then go to the asset account. That will be simpler for you to find out the loss on sale of the asset in the last year. I hope we are clear with this, children. Now with this, and let us see the questions that follow in the textbook. Illustration 17, 19. You are in a position to do the provision account questions now. I'll tell you which questions to be done. Question number 19, 20, question number 16, 17, 18, 19 and 20. Question number 16, 17, 18, 19 and 20 of your textbook are your homework, which I will check on in the next class. We will proceed with the next questions after checking these questions. The homework should be done, children. I will ask you to show your notebook there and then at that time. So those children, you will not send your work for correction to me. The pictures of the work will not be shown. Only those girls who are asked to show their work at that time will show me the work with the notebooks with your ID at that time. Okay, in the Google Meet. In the next class. So these 4-5 questions are your homework, which are assumed to be done before we proceed with the next lecture. Next, I will not proceed unless I see your homework done. Okay, girls, I think that's enough for today. We'll pause here. Bye-bye. Good night.